Bitcoin. So listen, cards on the table. My personal opinion is we're on the cusp of a major Bitcoin breakout to the upside. As long as Donald doesn't screw us over some kind of tweet, we're going to see prices potentially shoot from the current levels around $108,000, $109,000 up to maybe $120,000, even $125,000. That's my current bet. Anyway, I think we'll probably see a move like this within the next month or so. So don't expect this in the next hours or next day, maybe not even next week. But today I want to discuss a different price action theory that's kind of being discussed a bit across social media right now and break this down in more depth for you. And that's the idea that Bitcoin basically has been in these crazy sideways consolidation ranges. They'll range a bit more from here, and that it's been ranging for longer than most people expect. And if you look at the last 2 years of trading for Bitcoin, we have huge consolidation periods, which are much longer than people expect, followed by violent breakouts. And only after the sideways consolidation periods have exhausted themselves, that's when the major move happens and we break into new highs. So let's dive into this idea. We're gonna look at the strengths, the weaknesses, and then of course, see what conclusions we as traders and investors in this market can actually draw from these new pieces of information. By the way, the account that captures this idea is the guy named Tony the Bull Severino and his Bitcoin Elliott Wave Theory. So shout out to Tony, go give him a follow over on X. Now, as an aside, there's plenty of other people talking about a similar move here as well. But anyway, so at a high level, the idea is that Bitcoin completed a 1 through 5 Elliott Wave impulse pattern from early 2023 when Bitcoin was priced at $15,000. Those were the days, weren't they? Until December 2024 when Bitcoin first hit $108,000. Now I've highlighted that pattern here in green. Then the idea goes that Bitcoin might be in the middle of an ABC corrective pattern right now, which I've highlighted here with the orange lines. This ABC corrective pattern basically captures all the price action since late December up until now. Finally, we will start a new 1 through 5 impulse pattern again that eventually ends with a Bitcoin price potentially over $300,000 by mid to late 2026, which, by the way, breaks the 4-year cycle and fits in with the higher for longer theory following a gold ETF parallel. Now, digging deeper into this chart, understand that if this theory is correct, it means that we're basically at the top of the corrective B wave right now. But before we dive into exactly what that means, if you are serious about trading these cryptocurrency markets, then you need serious tools to do it. Femex is a great exchange that delivers the serious tools you need. You can trade all the top coins with deep liquidity, lightning fast execution, and the freedom to trade from anywhere. That's right, anywhere you live, you can use Femex. You might need a VPN in some situations. Right now, by the way, the deal is when you sign up exclusively using the link right down here, you'll be instantly upgraded to VIP level 2. That means 50% off your maker spot fees, 40% off your maker futures fees. Huge savings for active traders. You know how much that adds up. And it doesn't stop there. Femex is also offering up to $30,000 in sign up and deposit and trading bonuses, depending on how much you deposit, how much you trade. So go check it out. This is a crazy promotion. Link right down below. Don't wait. Get it today. Now back to the Elliott Wave stuff. So the C wave, if this is all right, would take us back down to around $76,000. Then we'd go back up to around $110,000 for the next wave 1. Back down to the upper 70Ks for the next wave 2. And only as wave 3 starts, which would be in early 2026, would we start breaking into new all-time highs. Or to put it much more simply, this theory has basically us ranging sideways for Bitcoin between the mid-70s and the 110K range from now until Q1 of 2026. This would break most people in the market realistically. So you've got a big idea of this theory in general. Now let's discuss the strengths and weaknesses of it from my perspective. So what I find interesting about the idea that we range sideways from now into 2026 is what it implies from a macro perspective. Just think about it. This might really be what max pain looks like. Time-based capitulation, not necessarily price-based capitulations. For Bitcoin, it's all normal price ranging. Not a dump back down to 50K. That would be real price capitulation, so we can all pick up some cheap sats, right? Not a pump up to 200K, so people can finally unload some of their altcoin bags. No. Just an exhausting, boring, sideways grind between upper 70s and the current prices. This is our range for at least another 6 months, it would break people in the market. And of course, your altcoin bags during that time would be brutalized to a level of unimaginable degree. Second, if the full scope of this theory plays out, then that implies, of course, that the 4-year cycle is dead, which is an idea I'm more and more open to. Obviously, it remains to be proven over the next 6 months or not. So remember, the 4-year cycle says we should peak by around the end of this year, and that prices should approximately be hitting the next cycle bottom by the end of 2026, not hitting new highs at the end of 2026. So if this sideways pattern does play out, then you can kiss your precious 4-year cycle theory goodbye, which I think is going to be probably proven to be an invalid theory in this cycle anyway, but maybe not because of this, maybe more because of gold ETF correlations and stock market correlations. Third, Tony mentions here something interesting in his blog post that accompanied his chart. Quote, another 6 months to a year of sideways would crush the spirits of individuals while entities would enjoy the opportunity to keep buying at current levels, which is very true. Corporations, states, all this stuff, they're going to keep buying. I think he's pretty spot on here, as a lot of retail holders would probably capitulate, especially their altcoin bags would consolidate for another 6 months or so, which would be a lot of downward price pressure on altcoins in particular. Bitcoin would pick up a bit of that too. And they'd end up selling their bags off to larger institutional players and companies before the real pump actually begins. Always the case. The market is a mechanism for transferring wealth from the impatient to the patient. So again, what's interesting about this theory is the idea that the vast majority of us really aren't expecting, nor are we necessarily psychologically prepared for, sideways price action for at least another 6 months. Bro, it'd be brutal. It'd be brutal. Come on. It'd be brutal, man. Then add the fact that since it's the publicly traded companies that are buying right now, these companies are basically keeping current prices elevated. But perhaps, just perhaps, their buying pressure needs several more months to really gather steam. We need more players to come in. What if we don't see any more players announced over the next few months? Prices start to stagnate, prices fall. Before we get that hard pop in Bitcoin's price that we're all wanting, we could have some more bullshit to go through. So that's what I find interesting about the idea. Now let's turn to some of the things that I'm not such a fan of here. Now really, I only see one, but it's pretty significant. To me, it seems like the Elliott Wave experts spend most of their time arguing with each other about which Elliott Wave patterns are correct or not, or really for any asset. Now, one man's impulse wave is another man's corrective wave. Like all technical analysis is open to interpretation, and it's all more of a art than a science. Now, I do think Elliott Wave theory is legit, and it's very, very interesting, actually. But again, the problem, what I can see, is trying to clearly pin down which Bitcoin wave price action we're currently in, and then making long-term projections really based off of that. Now, if you agree with me here, then the question then becomes, can we really make a projection like this so far out and try to bank on the idea that Bitcoin is simply going to range sideways from here until Q1 2026? I don't think so. Now, I'm definitely not bashing on the theory that Tony's floated here. Far from it. I'm very open to all different ideas. That's why we're sharing it here on the channel with you so you can make your own decision. Okay? But I'm just noting the speculative nature of the stuff that we're dealing with here. Technical analysis, of course, has limitations, and Elliott Waves among that. To wrap up here, I appreciate the idea that Bitcoin might be in for ranging price action from now until, well into next year, and that the big price move, the one from wherever we are now to 250, 300K, might take some time to cook up. But keep in mind, too, we're only 10 or 11% away from $120,000 Bitcoin. It's not such a big goal to reach. Right now, I'm sticking to my guns. I'm expecting that Bitcoin, at any time over the next few weeks, maybe the next month or so, breaks out to new all-time highs. And that we should be getting lots of new price discovery through the fall months. Q4 in particular tends to be pretty good for Bitcoin. I would expect to be looking at something like that this year as well. But in a few months, we look back, and we've only been consolidating for the entire time. We haven't hit new highs. We get strongly rejected. We don't take out 112K, or maybe we get to 113, but then we go back down, something like that. Maybe this theory did have some interesting validity, and hats off if that's the case. Thanks for watching.